All right, guys, back to work we go. It's Thursday evening already. We got one more day left this week, trying to finish up what has been one of the best weeks of the year for us here on this video newsletter. Hope you guys made some money today. We got Friday coming right around the corner. We got some really nice charts and some great trades we're tracking to finish up the week tomorrow. You know how we do it here tonight in the video. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money on Friday. Before we jump in and get this party going tonight, make sure you subscribe to our channel, set those notifications so you don't miss tomorrow night's video upload. And if you enjoyed the video tonight, do me a favor, will you hit that like button, give me a shout out in the comments section below. I always appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Let's get ready for Friday. We got more news coming tomorrow. We got some more great trades. And boy, oh boy, what a fantastic week it has been. If we can get half this much out of next week, I'll be very, very happy here. Boy, everything pretty bullish on the S&P and the Nasdaq right now. S&P, of course, pretty bullish. Nasdaq, obviously, very bullish. Anytime we see strong moves like this, we're looking for pullbacks. I have a number of different pullback areas I'm watching here right now on the S&P and the Nasdaq, but you probably know where we are right now, right? We're right around some pretty significant areas of resistance. So bull market, major resistance. Anytime I have a situation like this, the easiest way to make money tomorrow is going to be running stops, using stops as fuel, trapping in the other side of the market. We're going to cover a lot of that here tonight. So buying, but not just buying pullbacks, using stops as fuel. This would be a really great video lesson, especially if you're unfamiliar with how we trade in our trade room. Over on the oil is range bound. We get a bunch of earnings coming tomorrow. Not a huge surprise to see the range here on the oil. Love me some bear traps right now on the oil. We'll definitely keep an eye out for some bull breakouts as well. So, boy, lots of really great ways to use stops and run stops, using stops as fuel to make some money tomorrow. I'm going to go over all the details here in a moment on this video. Before we jump in, though, let's make sure we get all on the same page here for tomorrow. There's really one big news event tomorrow, right? You've got the personal income number at 8:30 Eastern time. This is known as the PCE deflator number. It's one of the most widely watched numbers for inflation, especially with Powell and the Fed. That's definitely going to be something that's potential to move these markets tomorrow. So you definitely want to be aware of that. And then the consumer sentiment number, specifically how consumers are reacting to inflation. That 10 o'clock number, like I mentioned last night, we oftentimes see some of the best trades in our trade room between 10 o'clock and 11 o'clock. So don't forget about that consumer sentiment number tomorrow at 10 o'clock. The pending home sales number, probably not that big of a deal, but that sentiment number, specifically how consumers are reacting to inflation expectations, that will be the big variable and the potential catalyst for tomorrow. We, of course, also are going into the last day, or I guess, final day of the week tomorrow. We've got earnings tomorrow morning. Boy, we've been talking about this all week this week. First of all, be careful in the overnight. Be careful in the pre-market. Volume is lower during that time of the day. And these news events, these earnings reports, they can really whip around pretty good. So please be careful overnight and in the pre-market tomorrow. And again, as I mentioned last night, if we have learned one thing this week, trade the darn chart. Trade the darn chart. Don't overcomplicate this. We don't care what the actual numbers are. All we care about is how the market reacts to it. So, tomorrow morning we'll be focused on trading the chart. And I would be remiss if I didn't remind you, Fridays love to run. We learned this last Friday, right? Fridays love to run. So my rule is always get into trades early in the day on a Friday, but leave a little piece of those runners, because as we've seen the last few weeks, those Fridays, they get low volume in the afternoon. Let that thing run into Friday's close. We oftentimes do see some really nice fluttering running markets on Friday. So get in early, try to leave a piece of it, right, and see how far those things will go. Last Friday was a great example. All right, back to our charts though, because let's face it, this is where the money is made on the charts. And of course, I'm going to cover all my favorite trades across each one of these markets here tonight. Guys, if you like making money, I would definitely recommend watch the entire video tonight, because every trade setup that I talk about can be applied to all of these charts, right? So don't just click off after your favorite chart is finished, because I'm going to build as we go deeper into this video. Every trade I talk about can be applied to your favorite market. So I'll give you a reason to stick around all the way to the end. Let's go S&P, we'll go Nasdaq, and you know we're going to talk about the oil because we got some big earnings coming for oil here tomorrow. A couple things here. First of all, these are all tick charts. Keep in mind all the time frames in the upper left-hand corner. These are all tick charts. This little yellow line, that is the 21 EMA, the exponential moving average. Keep in mind the S&P and the Nasdaq are very similar. So again, everything I talk about on the S&P can be applied to the Nasdaq and vice versa. And as always, I will also add in the description of the YouTube video, I have some new updated 60-minute and 4-hour charts with new bull targets. So if you want to see the bigger picture stuff that's helping me create a bit of a lens to look through today, you can grab those links in the description. I'll put some additional time frames down there for you, and I'll be using those as kind of a guide overall. You'll see what I mean, right? Get some really interesting 4-hour charts and 60-minute charts down the description of the video. All right, enough of the intro. Let's get this party going here. What are the most important factors on this chart right now? Well, we're overall bullish. Look at the 60-minute chart. Look at a 4-hour chart. It's tough to call this a bear market. So of course, with a bull bias, the bull bias is going to be my filter or my lens in which I look at this chart and decide what setups my favorite trades will be for tomorrow. The next kind of big thing right now is and probably the most important factor on this chart is, of course, we had that continuation early in the overnight of the bulls, right? If you recall from last night, we had that big run up after that massive reversal off of that low. We basically came in this morning with a nice big strong move up, and anytime we see a strong move like that, we're expecting a pullback and a retest of the high. As we always say in our trade room, that's mission accomplished, right? So now we're kind of right there. We're right at mission accomplished right now, which generally speaking is not a great place to be buying, right? Because we should be buying down here, right? Trapping in the bears, and taking our profit up around these highs. So it's not a great place to be buying. I wouldn't imagine a lot of big lot or professional buyers are buying here. The next most important clue, though, which is very important, is this strong rotation off the range low. We talked about this last night. Whenever there's a range in the chart and we go lower and rotate higher, this creates a lot of strength. And anytime we see a strong move in one direction, we expect another leg in the same direction. So the fact that we have this very strong rotation off the low, that's why I said earlier, I like the idea of buying pullbacks right now. I don't hate the idea, but my challenge, of course, is that there probably aren't going to be that many big whales, right, building big positions, buying into these big highs here, at least until we see more information tomorrow. So if I'm very bullish right now, but I'm not in a great place to be buying, this is where we have to use stop runs. This is where we have to run stops and use stops as fuel. So thinking about this, how do we make money on this, right? Knowing this information. As you can see, I get a lot of channels, right? Channel right here. I got that channel. I've got better channels. That's a great channel right there. And of course, the bigger channel is right there. If I had it my way tomorrow, right, what would my favorite trade for tomorrow be? My favorite trade for tomorrow would be a deep pullback, trap in some of the bears, and run some stops. It would really be just what we saw right here today. Deep pullback, trap in the bears, and use their stops, right, as fuel. But now we might not get that deep pullback. Let's face it, we may not get that deep of a pullback because of the strength of the short-term momentum right now. So what about shallow pullbacks? Remember, use stops as fuel. So as we go lower here, I want to anticipate that sellers are probably going to be trying to short off of this high. Again, I can't expect to have a lot of buyers up here. So for me to get some sort of edge over the sellers right now, I have to use their stops, right, as fuel. And to do that, we're looking for bear traps. Now, we talk a lot about traps. My personal favorite entry setup that we talk about in the free trading course, right, is a bear trap. So as we go lower, get down into some of these support levels and start watching for these bears to come in and short this thing back off the high. It makes sense why they would try to short it. It's a range. We've got this prior high. It makes sense this market could easily rotate all the way back down before you see buyers come in and gobble this thing right back up again. So to shallow pullback, bear trap, right? Those trap entries below that low. We go lower into a much more desirable channel now. But again, we're still relatively high. So how do we get a better entry on this? Bear traps. Bears try once, bears try twice. Bear traps, right? And again, these are, you'll see a lot of examples of these, right, in our free trading course on the website. Deep pullback, trap in those bears, buy as low as you can. Think about where their stops are going to be, right? That's what I mean. Use those stops as fuel when the bears get caught. Their stops will be buy orders, and that's the juice we need to buy, right, theoretically, relatively higher. My favorite trade, though, right? My favorite trade would be that nicely deep pullback. Now, look what happened right here. Okay, please, if there is a trading god looking down on us right now, this is what I want. This is what I want for Friday, right? I've been a good trader this week. This is what I want for Friday, right? You can see this is exactly what you want. You want to run it lower. You want to get these bears coming in. Give them one try. Give them two tries here, right? Let them try a couple times. And once you can see their stops are exposed, now we can punch it running right back higher, right? Bear trap. And then don't forget, once it pops up, now we've got what's called rotation off the low. And now we go out, we find that new channel off the high. We mark it off the low. And what do we always say? First test. Yeah, first test is the best test off of that channel. This is exactly what we are hoping for here for tomorrow, right? So think about this. This would be a great, I got a couple more variations we'll talk about on this, right? But trap in those bears, right? To try failure patterns. It's basically a failure pattern, just like you guys learn in the free trading course, a bear trap failure. And then again, this could be a bear trap below the low. It could be a seller failure pattern. It could be a pullback combo, right? All the same entry patterns you guys learn in the free trading course, which reminds me, we've talked a lot about traps. You know how much I love traps. If you want to learn more about traps and all my favorite entry patterns, I know most of you guys have taken the free course, but if you're here for the first time, if you haven't learned how to use stops as fuel yet, oh my goodness, this will change the game for you. I'll put a link up here for you in the upper right-hand corner. Grab that link, take the free trading course, because the strategy that I teach in that free class, well, first of all, it'll show you a really simple way to look at a chart and know where the best winning trades are going to be each day. And I'll teach you 4 different entry patterns. You know we'll learn about bear traps and bull traps, right? But 4 entry patterns to help get you money, get you making money on your own account. That free trading course is perfect for someone trying to add another income stream or make a full-time career out of trading, and you'll learn a lot about bear traps and everything in between. Another variation of this that you want to think about is we may end up rifling. I mean, we've had some really sharp pullbacks in the last few days. If they really punch lower, remember, anytime we see a strong move lower like this, they're going to want to retest that low, right? So let them retest the low and then do it again, right? Do it again. 1, 2, bear trap and run those stops. Punch it up, find that new channel. And again, I'm obviously simplifying this right now. You guys will see more of the entry patterns we like to use in the trade room, right? But, again, really strong move down, retest of the low. We may not get that bear trap, right? They may go in and retest. And once they do, mission accomplished. Then let the rookies come in, trap in those rookies, hit their stops, light those stops up. Remember, when the bears are trapped like that, their stops become fuel, and then as it rolls over, now we've got the rotation going higher. Remember, guys, this whole sequence It could it could happen here. It could happen here. It could happen even a little bit lower, to be honest with you, because we've got these trend lines coming down below. It could really roll over and bounce right as we go. Now, I'm sure by now. Oh, and don't forget, I'm going to cover the move going higher here in a second. We will definitely talk about that here in a moment. How could I sell this thing going lower? What's the best way to short this? So a lot of people would probably think, well, why not look for a bull trap off the high? You can, but this is a bit of a dangerous pattern because remember, we're not just retesting that high. This is a very strong move here, and we're not an overall bear market. It's a bull bias market right now. So trying to call a top on this, it's a gamble. It's just not my favorite trade whatsoever. It might work. I always talk about this in our trade room. Even a 30% winner is still going to work 30% of the time. The problem is in a bull market with a strong move up like this, the best way to short off the top is to wait for it to bear trap, go back to retest the high, and then 1, 2, and use the buyer stops to run back down again. Right? Remember, strong run up, buyers are going to likely be waiting there to punch this thing going higher. Right? And so once they get that retest of the high, then we have mission accomplished for the first one and mission accomplished now for the second one. Then I can go out and start thinking about that short off of that high. So be aware for that double top, right? So like I said, right, as we go higher, sell double tops, right? Be careful to pick tops on this, and be careful trying to short a market like this overall. I think one other trade for the short side as we go lower is to sell bull traps, and we'll see if we can set the record tonight how many times I say the word trap in this video right now. But let's say, for example, we pop down and all of a sudden that momentum shifts now, being a little more bearish. We know kind of where the market might want to go at that point. We pop down, we grind down going lower, and now we start finding a channel going lower. And that's where those bull traps, right, will be useful. This is pretty much the best way to short this thing. Again, I'm not comfortable trying to pick the top on this, but this is the best way to short this thing as we go lower, right? Be aware, though. Be aware. You've got to be looking for a bull trap, right, above that high, right, above, trap high above that high, because as you go lower, what's going to happen? There's more buyers coming down here, right? There's more buyers to buy low in an overall bull market. So as we go lower now, the bears come in, they get caught getting too greedy down here, and they get trapped and use those stops as fuel as well. So as we go lower, and again, this is a very slow time frames. On the faster time frames, we may get some bull traps, some trap highs for the shorts going lower, but just be careful, right? Be careful selling too low as we go lower. All right. Using stops as fuel, right? Using stops as fuel on the pullback bull market at a major area of resistance. Next big question is, what if we go higher? What if we pull back and blast and run higher? That's a very possible scenario. Again, the channel there before, right? What if we go higher here? What if we don't get that kind of dream come true, deep pullback and squeeze right back higher again? Let's talk about that now on the Nasdaq. Now, Nasdaq, of course, is very, very similar to the S&P 500. You could easily say the Nasdaq probably is a little more bullish than the S&P is right now, because you can see we have a bull market basically into a trading range. We rotate below the range, and the amount we go above the range, right? There's that we call a pendulum swing. On the S&P, we're basically right at the pendulum swing. On the Nasdaq right now, as you can see, we're quite a bit through that pendulum swing. Remember, same idea, right? We're overall bullish on a 60-minute and a 4-hour time frame. That's the lens we're looking for. This is a very strong move higher here, and anytime we see a strong move in one direction, we're expecting a pullback and a retest. This is kind of a minor version, right? This was the major version, big move up from last evening, right? Pull back and retest. It's the same principle. Anytime we see a strong move, we're looking to buy pullbacks, right? And retest the high. So we know we're bullish. We just have to, at least for me, I think we're probably not going to get a lot of big buyers up here, right? Because by definition, buyers want to buy low. That's why on these pullbacks, we have to get bear traps, right? We have to trap in those bears and use their stops as fuel. And again, I have kind of a master class on stop runs in that free trading course that's linked up in the upper right-hand corner. That will really change the way that you look at charts, probably for the rest of your trading career. So I think we covered it pretty good going lower, right? We know how to short it. We know how to buy it with the bear traps. I want to talk about as we go higher here, though. As we go higher, we get some great targets up overhead. If the buyers really get what they want tomorrow, this is kind of my short-term bull target right now. But there's a big bullseye at that 12,339 right now. If you go into the description and grab that 4-hour chart I dropped in the description, you'll see why I say that 12,339 level. Over on the S&P, we've got quite a bit of space to go. You can see 41, 54, 40, 97. Again, you'll see more examples in the description there with those slower time frames of why those levels are my next big objectives. So, okay, now the big question is, as we go higher, the key will be to buy pullbacks. Now, why buy pullbacks? Well, if you've been paying attention the last couple of days, we're definitely a bull market. But every time we get these really big breaks out, what happens? And we don't get as many buyers up there, right? And when you go check out those 4-hour time frames I mentioned, you're going to see as we go higher, we start running into some pretty big areas of concern up overhead. So when I think of this market going higher, I think I don't want to chase it. I want to wait for a pullback. And what you want to think about is if we were to not get that, again, if all we do is rip higher here, what you want to think about here is as we go higher, start thinking about these bigger channels, right? These bigger channels. And again, we get the 21 moving average coming up. Kind of my dream scenario for tomorrow, if we do kind of go higher here, would be not to chase the market higher, but wait, let them get that sharp pullback into the open. And you got it, right? Trap in some of those bears and use their stops as fuel, right? We're basically looking for more of those bear traps. Again, we'll call it buying pullbacks, right? It's basically what it is, right? So if the market really rips higher, think about finding a bigger channel, right? Think about where these prior highs are, right? Those will all be very effective. Don't chase it as we're going higher. And again, this is kind of my favorite way to trade this would be find a new channel, wait for that nice deep pullback. And remember, I'm keeping this pretty simple right now, but if we can get underneath that 21 moving average, get those bears to come in and take the bait and get short on this, it's a very strong move up. So we know that anytime we see a strong move, they're going to want to what? Retest the high. And so once we see them get short, now we've got their stops. Again, we're going to use those stops as fuel. And this could easily set up for a failure pattern into what I call a pullback combination, into a strength move going higher. And again, we've got some good targets, right, waiting up overhead. So if it really pops up overnight, right, just be aware of these bigger channels. Okay, now another thing you want to think about as we go higher, if you want to be a little more aggressive, if the market runs higher, if we see a real strong move, a shallow pullback, and a higher high in price, this oftentimes becomes the best place for a trap entry. In fact, we call these two-tried traps in our trade room. So if you want to be a little more aggressive on it, as it's ripping higher, strong move, shallow pullback, higher high in price. Now remember, we have to get that higher high in price because the higher high in price confirms it's not just a deep pullback and then trapping in, right? That's very, very important with that setup. And obviously what I'll do is I'll go out and look for some more of these highs up here, connected off that low, and see if I can't grab that entry, right? Like that. This is very similar to the channel that we saw today. Right, that whole thing that we saw today, if you recall, right, this was basically that exact same situation where the market was simply blasting higher, and you go way down bottom, right? We talked about this last night. Connect those lows, right, and you've literally got that failure set up. This may not look very big on the slower time frame right now, but if you're with us this morning in the trade room, this produced a really nice run on the faster faster entry time frames. So it's a great example where you don't need this huge move to make a bunch of profit, right? Especially if you know how to stay patient, right, for the right entries. That setup off the low of that channel, that was a failure pattern today, but same setup we saw on the S&P, right? So we talked about that last night, right? Kind of that finding that grinder here. So as we pop up, be aware of these larger channels as we go. Don't forget also, right? Don't forget also too, sometimes it'll pop up, it'll pull back to the moving average, it'll jump off that moving average, and anytime we see it pop up, pull back, and really jump off the 21 EMA, we then go out and find a new channel, right? That creates those 1, 2, 3 moves, and then we go out, we find that new channel, and as we always say, right, we grab that first test, right? Grab that first test is the best test off of that low. And I'm simplifying it right now. It could be a trap pattern. It could be a failure pattern, like I mentioned right there, right? They get underneath that 21 moving average. The bears come in, try to short this thing. The bears are on the wrong side of that momentum and they get trapped, right? We can use those stops as fuel. Again, on a faster time frame, produce a really nice little short squeeze there for an easy profit. All right, so keep in mind on that as we go higher here, finding new channels, waiting for pullbacks, and using stops as fuel. How would I sell as we go higher? Well, remember, if we go higher right now, we have to be very careful trying to short that top because it's a very strong move in an overall bull market. So the best way you want to even think about shorting this is to wait for that deep pullback, follow the game plan we've talked about already, get that retest back up to that high, and then once they retest, remember, professionals are buying low. Right? These will be rookies now that will come in and buy high. So now, this is why I say sell double tops, right? We're just too bullish to pick tops right now. Not in this environment, at least not yet, right? Remember, even a broken clock is right twice a day. We may see some tops get called, but they're not reliable enough over a long period of time. Once we get that bear trap and run those stops off the low of that channel, we retest the high. Now maybe we do. Maybe we do get the buyers once, the buyers twice. And now we have a much higher percentage trade for that short, right, coming in off the high. We talked about that earlier, right, over on the S&P here. Another scenario that you want to kind of keep in mind here, we've seen a lot of these pops into ranges right now. If we were to pop up and go into a trading range, what do we do if it pops up and goes sideways here? Oh, these are easy. We go out, we find prior swings, right? We basically find support levels below the range. We wait for a pullback. We don't short the pullback. Ranges act like magnets. We wait for the other rookie traders, the inexperienced traders who are not watching this video, and we look for the bears to enter. Remember, bull market into a trading range, just like right here, right? Look. Bull market ends up being a trading range, right? We pop down, bears try to get short, there's your stop run right there. The exact same scenario. So keep that in mind for tomorrow as well, right? In case we do pop up, right? We don't get that deep pullback right away. And again, remember, all of this can be applied to the S&P and the crude oil, right? I should also mention all of this can be applied to whatever your favorite market is. All right, guys. So I think now we've got a pretty good game plan. And by the way, if we do get that seller failure pattern off that trading range, we take some profit off at the high of that range and we mark up the amount below, we mark the amount above, and that will help you squeeze out, some final targets as we go higher. Just as we saw here, right? Bull market into a trading range, break down, trapping the bears, their stops get squeezed, right? And it rips and runs higher. Where's a likely objective? The amount we go below is the amount we go above, right? It's a good target to use on a trading range. All right, guys, I think the NASDAQ is salted to go. We know what we want, right? We know what we want here for tomorrow. Please be careful, again, calling tops in these overall bull markets. Could it happen tomorrow? Could it happen tomorrow? It absolutely could happen, right? Anything is possible, especially on a Friday in the crazy world we're living in right now. But remember, we want to trade the most reliable trades. Those are the most reliable trades coming up here for tomorrow. How about some oil? Last but not least here, wrapping things up here on oil. We talked about this earlier. We got some big earnings tomorrow. A little company you might have heard before, right? Chevron, of course, reporting tomorrow before the open. So this definitely has potential to be a major catalyst on this. What's the most important factor right now on the oil? I would say that there are probably three key insights that you want to be aware of. Of course, first one is the bull bias, right? That again is the lens I'm looking at this chart right now. The second thing is the trading range. And so ranges, of course, are magnets, right? So think about it. If we have an overall bull market right now, where do you think the best trades are going to be? It'll be bear traps, yes, right? Just as we talked before on the NASDAQ. And it'll be breakouts, right? It'll be breakouts. Right? Those are where the most reliable trades will be setting up here for tomorrow. A very important clue right now, and you can see it listed right here, is we have strong moves in both directions. So strong move up. Now, what does it tell us? Strong move up, they want to retest the high. But look, they took it right back with a strong move lower. Now, this is where a very important topic called recency is very important, right? Recency. Whatever's happened most recent is the most important. You know, that's the way a lot of things work in life, right? So the fact that we have a strong move down, most recent, tells me that what should happen right now is we should try to buck out of this range. We should try to run lower. Now, do I want to sell down here? Is this a good place to be a seller in a bull market with a range above us and just a little bit of support down there? No, it's a horrible place to be a seller. But let's hope, if you're an oil trader tomorrow, let's hope that the Chevron news takes this thing down on those lows, right? Because now we're at support in a bull market below a trading range. This is just asking for, you guessed it, more bear traps, right? Now, this could be here, it could be here, it could be a little bit lower than that. But remember, think about this now. As it rolls lower, we go in, let those bears, right? Let them dig their own grave and use those stops as fuel, right? And punch out those stops. And then don't forget, this is where the fun happens, right? Now we can go out, draw a trend line off those highs, find the channel off that low, and we can grab, as I always say, that first test off the low of that channel. Now think about this on a Friday. Remember, Fridays love to run and run and run, low volume move on a Friday. This would be a situation where the amount we go below the range, the amount we go above the range, right? This could get really good once those bears get trapped and the buyers load the boat on the first pullback. Definitely, again, take a piece off top of that range, right? Piece off at the 82.14, the retest of that high. And again, leaving that runner, right? Because they could easily slingshot, right? That rotation off the low there. Now, keep in mind, if we do go lower here and we V-bottom, okay? I should have mentioned this earlier on the S&P and the NASDAQ, but I'll talk about this tonight on the oil, and you can apply it to the S&P and the NASDAQ. It'll give you a reason to stick around and watch all the way through for the rest of it. But at V-bottom, sometimes what happens is we take out these lows and the market simply springs, right? And just kind of starts to grind going higher, right? We may not get that bear trap down at those lows, right? So, and again, this could easily happen on the S&P and the NASDAQ too, right? Get that really deep, right? All the buyers are waiting down there. So this could also apply to the S&P and the NASDAQ. I'm going to mark off that high. I'm going to mark off that low. Now remember, overall bull market. Right? The wind is already at our back right now. When it kind of bounces and V-bottoms off that low and grinds, just simply go out, mark off that new channel, and don't miss that first test. Get below prior swings. That's where traps live. Get below the 21 moving average. That's where failures live. Failures into pullbacks, right? And again, we're trying to go back to the other side of that range, take some profit off at the side of that high, right? And sort of leave that runner and see how far it'll go, right? That's my favorite, again, my favorite kind of area, right? That bear trap or that fake out breakout at those lows here. Keep in mind one more thing here. If they were to take out those lows, if they were to hold that pullback and really blast, right, and really rip off that moving average, that is a reversal. We find that new channel by drawing off the low up around that high and then shorten that first pullback from there. But be very careful about that. It could easily jackknife lower, trap in those. Remember, the key to a reversal is it doesn't matter how strong that move lower is. They have to hold the pullback and they have to jump off that moving average, right? Like for example, right now, look at how strong that move down is right now, okay? The buyers still have control of this market right now. Why? Because look how the buyers went up, pulled back, and jumped. When the buyers jump off the moving average like that, that's a bull market now. A bull market also included with a larger bull market, right? So this, of course, is short-term. Bulls have control, right? Buyers have control. Now, a very deep pullback. But are we seeing the sellers? Did the bears come in? They hold that and jump it? No, they did not. So if somebody asked me, what is the oil right now? I'd say we're very bullish right now. However, there's a strong move down, which will want to get retested. But it's still a bull market, right? Until they can hold that pullback and jump off that moving average. So as they roll lower, the buyers technically still have control of this. They have to hold that pullback and really jump off that moving average in order for us to get a full-blown reversal. So take out that low, hold that pullback, blast, right? I mean, they have to really rip this thing here because, again, there's a lot of support down here. And then once they do, then we find that new low, we find that high, we drill down, and we can grab that first test off the high of that channel, right? So, again, please don't get fooled. Don't get fooled by strong shots lower in a bull market, right? Make them prove it. They got to hold it. Once they hold it and blast, then we can start considering some shorts off the high of that channel. Now, in that same kind of vein, if you will, right? We're already bullish right now. So anything that goes higher here can be trusted. Well, for the most part, right? Obviously, we don't want to buy into that high. But really, any decent breakout right now can be trusted because we're already a very bullish market. Again, we haven't held off the moving average. So if we pop up, if we hold that pullback, right, and we jump off that moving average, we call these 1, 2, 3 breakouts. Find that new channel, buy that first pullback, right? Buy that bear trap, buy that failure, right? We're trying to get long off that channel. If it pops up and begins to flutter, right? That grinder, we mark off that high, we bring off that low, right? We talked about this before, right? Find those first tests off that low. We have a lot of resistance up overhead on oil. So what you want to remember is if we do see a breakout, whether it be a pop and grind breakout like I'm talking about right now, or we see the 1, 2, 3 breakout, remember the first leg is the measuring leg. So it's first leg, third leg, as we talked about quite a bit so far this week on these videos, right? That'll help you squeeze out a lot more profit as we go higher here. You can see there's a lot of levels. Now, again, I put a 4-hour chart on the in the description, and you'll see this 83.62 level is probably where the buyers really want to get to here. We'll see if they can, right? We'll see if they can. I also think you'll see on the 4-hour chart in the description that it does feel like the market wants a shot lower. It does feel like we're in a bear trap or potential for a bear trap because of some lack of follow through. There's a big trend line coming up on the 4-hour chart. You'll see what I'm talking about when you guys get that link in the description. All right, I think we've covered most of this already here now on the oil. So trapping in bears, using stops as fuel, or buying breakouts. Now, could I sell off the high up here? Would that be a smart short off the high right now? It's a gamble, right? We'd have to really wait for these buyers to struggle, and then because of that trend line coming up, right? You see that? That's a tough short right there. So the only way to sell it at that point is a bull trap or a crown reversal pattern, as we talk about a lot. This is definitely not my favorite trade by any means. It goes against momentum, right? Again, the bears do not have control. And if we do see exhaustion and we can get some stops getting run, we get this trend line right there. So it's just not a very desirable trade. I would much rather wait for it to pop up, hold, and go, and then start getting into a bigger position, right, as we keep going higher. That's a much more desirable trade. What do you think? I'd love to hear what your thoughts are. Hit me up. Give me a holler in the comment section. You know, am I crazy thinking about a bear trap right now? What do you think? Right? I would love to know your feedback. As a trader, I'm always looking for different points of view. So I'd love to hear from you in the comment section. And if you enjoyed the video so far, do me a favor, hit the like button, make sure you subscribe, share this stuff with a friend. You can always share these links with a friend here. They'll benefit from it as well. All right, guys, I want to wrap things up here for tonight. I'll tell you, a fantastic week. Again, I think probably the best we've had in our trade room for quite some time. So really, really a great week, a great example of how we trade. We don't worry about the news, right? We trade the chart in front of us. Be aware around the edges of the session with the earnings. We'll see you tomorrow, 8 o'clock Eastern time in the trade room. If not tomorrow, you better come back next week, right? Of course, we'll be the trade room next week, and we'll see you guys same time, same place on Monday evening. If we don't see you tomorrow morning, have a great, great weekend. Get some rest, have some fun. Hopefully the weather's starting to get a little bit better where you're logged in from right now. If you got any questions, don't be afraid to call too. I'm always here. I know I go pretty quickly through these videos, but definitely don't be afraid to call the office. The easiest way to get help is to call, use live chat. I'm always here to help. All right, guys? Hope you guys learned a bunch. Hope you use it tomorrow to earn a bunch. Finish the week with a bang. And I'll see you guys same time, same place next time. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.